Well, Theo, we've just had the big budget speech by Theo and Warren, and it was a speech that a lot of us were dreading. I mean, there was the real potential for some quite heavy increases in tax. There were some people that were forecasting, some economists and talking heads that were forecasting really dire and disastrous news that could hit us, big tax increases on VAT or income tax or wealth taxes or the like. So what's our view? How was this budget? Are we happy? Are we sad? Are we okay?
Yes, Warren, I think relieved is perhaps the right word. But there's also another element to that, and that is that we were always expecting that the government can do nothing about the expense side, that they're stuck in a grip of, amongst others, trade unions, and that the expense side was non-negotiable, so therefore the income side will need to be adjusted upwards, and that means tax. That didn't happen. We got a much more aggressive budget in terms of expenses and even some relief on the tax side. So just a few points of interest. Number one, the fastest growing item in our budget is the interest to service our debt. That is roughly 1 billion rand for every working day the South African government pays to service their debt. That element, if it keeps on growing, will crowd out any other expenses and any other more prioritized items we should look at. But let's just look at a few items. Number one, the big saving will come from the below inflation increase expected on civil servant salaries. That there is an execution risk in that. But if I read between the lines, that's going to be aimed at the higher earning civil servant. Remember, there's 29,000 civil servants in South Africa that earn more than R1 million a year, out of the total of 150,000 people of the whole population that earns more than R1 million a year. That's where they're going to target at. Now that's smart, because it means that those people are not really trade union members. But number two, it's going to be very difficult for a trade union who represent a working class member to fight for somebody that earns 800 or 1.2 million rand a year. So that's going to be difficult. Second point, I think that's very good news, is the additional 2.4 billion allocated to the National Prosecuting Authority, allowing the National Prosecuting Authority to employ about 700 more investigators and 277 more prosecutors. That's what we need to see. I also think that if you look at the way that the comments were made, the government realizes that we have to get this economy growing. Our problem in South Africa is growth. That's a primary problem. Because if you measure debt to GDP, if your GDP doesn't grow, it's a problem. If you measure your borrowing requirements relative to GDP, if your GDP doesn't grow, that's a problem. So all of these numbers will look a lot better if we start to see growth. And I think the government realized that. And although I don't foresee growth in the short term or in the medium future, at least that was appreciated in this budget. So from my point of view, given the state of the South African economy, given the fact that we've got unemployment at close to 30%, that the economy is not growing, I think Mr. Mboweni did us a favor by not stifling growth in this economy. And hopefully this will be enough for the rating agencies to say when Moody's on the 27th of March again issues their point, that they might just give us another 6 months. And then we hope this execution of the planned implementation will start to bear fruit. It's going to be challenging for government, but I do think it's much better than a lot of us anticipated. But that's from a macro point of view elements. If you look at it from a investment advice, personal finance side, what's your advice now that you know the details of the budget?
Well, Theo, I think the fact that the budget was mildly positive actually means that from a financial planning perspective, there isn't a tremendous amount that we would need to change in our clients' lives. The nice thing is that they've done little things which are very helpful. For example, increasing the allocation to tax-free savings accounts per year. So that means instead of 33,000 a year, we can now invest 36,000, and I think that's kind of a no-brainer. We should be doing that. And then also the way that they've adjusted the tax brackets, the income tax brackets, that there's a bit more freedom there for us to get a little bit of a tax saving in another way. But luckily they didn't increase the income taxes. For the rest, I think there's a theme that's more important, and that is, it feels to me like they're taking a more rational approach to exchange controls. One of the big fears from some of the people that were creating a sense of fear in anticipation of this budget was that we would see a tightening of exchange controls. And in fact, if I read this budget correctly, it feels to me like actually exchange controls have been relaxed. And then I think the other very important issue here is around those who are potentially not living in South Africa now and were going to be affected by this expat tax. They might still be affected, but it seems to me the rules are going to be changed, and they're going to be much more rational and perhaps not as punitive as they were initially going to be. And I really like that as a sign from government that they're actually listening, because it felt to me quite a stupid way that initially approached this, and now it's a much more rational way, much more sensible, and hopefully it creates a better outcome and doesn't force people who didn't want to leave South Africa permanently to actually now keep their links. So those are kind of the major themes that I can see. From an investment perspective, I think that the note to corporates that potentially they'll lower tax rates is very positive. That will always help in the growth environment of the JSE. And if we do see some sort of growth, I think that helps the argument for those who want to retain some of their capital here. So there's nothing new or scary for me in terms of saying, well, we need to send more money out of the country at a faster rate or something like that. I think for now, it's probably just keep waiting and seeing. The things that I would like clarity on from here will be around the prescribed assets. Is it going to happen? How's it going to happen? What does it look like? Is it good? Is it bad? Etc. Etc. I think for purely from a financial planning perspective, it does cause people to question whether they should keep contributing to RAs. So we need to see what that's going to be about. And then for the rest, I think it's a case of watch the space and let's see how the other parts of government operate. Around the expropriation without compensation. And then the Eskom issue, how they resolve the balance sheet of Eskom. Those will be quite big investment indicators, ironically, because I think it gives us a sentiment change, or it doesn't. So in summary, no major changes for us to consider, I think, from a planning perspective, but at least now we've got a little bit of breathing room to make better decisions for especially for international capital. So in summary, I think from a Galileo perspective, we think this is probably the best budget we could have hoped for. And for our clients listening, this wasn't the big scary budget it could have been. It probably couldn't have been much better. And I think that's the point here, is that it was a heck of a job to find the balancing act that they did, and we were pleasantly surprised. So sit tight, don't get too caught up in the hype. Keep watching the space. There are a few more big flags that need to be resolved, positive or negative, and from there we should be able to send our clients another update.